Welcome to Web3 Watchdogs, the podcast that takes a deep dive into the world of Web3 security, compliance, and risk. Join Michael Pearl as he interviews executives from across the Web3 industry to uncover the challenges and opportunities of this rapidly evolving space. Web3 Watchdogs is sponsored by Cyvers, your one-stop shop for Web3 security and threat mitigation. Cyvers harnesses the power of AI to eliminate hacks, scams, fraud, and compliance challenges in real time, and even before they happen. For more information, visit cyvers.ai. That's CYVERS.ai.
Hello, everyone, and welcome to the Web3 Watchdogs, the podcast that focuses on everything security, compliance, fraud, scam, risk, and basically everything that has to do with security and safety in the crypto space. And before we dive in, just a quick reminder, please rate us 5 stars, comment on the episodes if you have anything to say, and offer us to your friends, recommend us to your friends, and we would be more than happy to hear from you. And today we have Derek Hong. Derek is the head of compliance of Hong Kong at Matrixport. Derek, how are you?
Good, thanks, Michael. Thanks for having me today.
Very happy to have you here, Derek. So, Derek, please tell us about yourself. Tell us about your background.
Yep. So currently, I'm head of compliance of Hong Kong at Matrixport. So basically, we're dealing with the exchange license here in Hong Kong. It's a deemed license. And previously, before I joined Matrixport, I was in N Group. So basically, dealing with the payments licenses across the globe. It was kind of in a fintech / payment space. And then before N Group, I was in Adyen, which is a merchant acquirer. So still payment space. And back a bit backwards, I was in the securities and futures industry, so basically still doing compliance. So I was kind of shifting from traditional finance, securities, futures, FX as well, and then to payments, fintech, and then to crypto, where I was in now.
Very interesting. So you have a very rich background. Started out from a securities and FX company, and then you went to Global, which obviously all of us know, End Group, sorry, that all of us know. And now you landed at Matrixport, which is basically a crypto unicorn, right? You guys became a unicorn recently.
Yeah, I'm not sure about the definition, but yeah, I'm glad that there's post that we are unicorn. Yeah, but I think it's a pretty good company, so that's why I kind of transitioned from N to Matrixport as well, because I think it's a good place where I can land for the crypto. Yeah, basically to start my crypto career in compliance.
Yeah, it's a very good place to start. And I'm curious, what are the similarities and the differences that you see basically in the role of the compliance manager between these companies, which are very, very different?
So I would say in terms of similarities, so actually I would say in terms of compliance, AML, because in general sense, they are basically branching from the same I wouldn't say legislation, but probably the framework, the regulatory framework. So things are similar, but probably what's the difference is the technicalities, because let's say FX, payments, and crypto, I think they're quite different in terms of what is required from a regulator's perspective. For example, FX, there are things like slippage or market manipulation. So that part, market manipulation, probably a bit similar to crypto. But then in payments is kind of a different thing, because the payments ecosystem, I think it's quite huge as well. We got like payments processor, merchant acquirers, all these visas, these card schemes like Visa, Master, and a lot of different these data processes at the back end as well. So I would say the really technical parts are very different. And for crypto as well, the monitoring, I think comparing with traditional finance and even for the FX, it's very different because it's more technology driven, I think. AI especially as well, where it's kind of a hot topic as well. And I think most of these kind of monitoring or maybe these vendors out there, they blend AI in these monitoring as well. So I would say similarities, it's big compliance and AML branch, but then the differences, I think they are quite, really different in terms of all these different areas.
Yeah, obviously different assets, different regulations, different compliance practices. And for the listeners or the viewers that don't know, Matrixport is probably Asia's largest all-in-one crypto financial service hub, right? So you have lending, custody, trading, and so on and so forth. From all the activities that you see in Matrixport, which ones are more complex or unique from a compliance standpoint?
Actually, I would say the platform itself is pretty unique because it's kind of blend everything. Because as you mentioned, like all-in-one crypto platform, right? But I think we have distinguished different business lines. So, for example, for Hong Kong is kind of a really VATP focus. So VATP stands for Virtual Asset Trading Platform. So it's kind of a licensed thing under the Hong Kong regulator SFC. Again, just to clarify, for Matrixport Hong Kong, we are only deemed licensed. So deemed licensed meaning that it's not an official license yet, but we are viewed by the regulator as kind of already having the license. So that's why we need to abide by all the different regulations already. We are kind of optimistic and working towards gaining the official license, but this is where we are now. So for the group, we got, like, as you mentioned, different other business lines as well, custody, lending, other things as well. So I would say probably, I mean, the whole platform is quite unique. So different business for different different investors, and probably there's some kind of sensitivity as well, because I mean, in terms of different jurisdictions, there are products allowed or products that are restricted. So I guess we also need to navigate through these like different laws, regulations, and I think we need to be very careful in these as well, given that these regulations evolve quite quickly. So we need to be really careful in terms of this.
Yeah, so you mentioned Hong Kong and you mentioned the VATP that, for the listeners that don't know, it's the equivalent of VASP, right?
Yeah.
VASP in other jurisdictions. And, it's interesting, Hong Kong is trying to position itself as a Web3 hub. And, it has a fierce competition in Asia because obviously you have Singapore and you have kind of the more locally oriented places like, let's say, Korea and Japan. How do you view Hong Kong from the regulatory standpoint? What stands out there in terms of, whether the more permitting rather side of the regulation, or maybe more restrictive side of regulation? How do you view basically SFC and to some extent HKMA, which is another regulator which deals with other fields of financial regulation versus other regulators and its framework?
Yeah. So I think for the regulators in Hong Kong, right, for instance, SFC and HKMA, I think they are really doing a good job in balancing regulation versus innovations. Because so actually last month, right, consensus happened in Hong Kong. We got the senior government officials coming out basically embracing Web3, kind of positioning Hong Kong as a Web3 hub, probably in Asia and globally as well. And the regulators are basically following this line. And I think the regulators are quite agile. They're basically laying up like frameworks. For example, for SFC, there's this very clear framework on the VATP, the FAST, and also on a couple of new consultations or new frameworks, which the SFC probably will regulate the crypto OTC or crypto custody later on. So they have laid this down very clearly in their framework document. And for the HKMA, they got this stablecoins bill December last year, basically, again, laying out very clear terms in terms of stablecoin issuance, stablecoin marketing, offering, etc. And probably also on consumer protection, which is, I think, quite of an important thing that the regulators in Hong Kong are emphasizing, because I think probably it's a bit not that being emphasized in other jurisdictions. So for instance, for Hong Kong, I think because of all these like different scams or crypto related things that happen not in Hong Kong but probably globally as well. So as a retail investor, probably they may fear that their investment may be lost. So I think the regulators in Hong Kong are really into this investor protection, insurance, all these things. So I think the regulators in Hong Kong are really agile and kind of really doing a big step forward in terms of all these regulations versus maybe let's say SEC, they're kind of enforcement driven, but I think they got a new administration now. Probably things will change, but I mean, back then it's kind of all these enforcement actions, right? And for FCA, I think they are kind of evolving, but probably in terms of a clear framework or in terms of consumer protection, I would say Hong Kong regulators are really doing a good job in this.
Yeah, so we'll zoom in on the consumer and investor protection in a second because it's a fascinating topic. But before that, I want to ask you, so you said that you're deemed licensed.
Yeah.
What kind of process did you have to go through from a, let's say, compliance operation standpoint within the company when you became in that status of deemed license? What did you have to restructure? What kind of hires did you have to do? What kind of tools did you have to implement to basically meet the requirements of the regulator?
Yep. So actually, we hand in our application last February 2024. So we are kind of the last batch of applicants to apply for this VATB license under the deemed licensing route. So meaning that before then, we are kind of operating in Hong Kong already. So we got a pre-operating business. So that's why we qualify for this deemed route. But then for now, let's say if a new player comes in, there's no more of these like deemed licensing. It's kind of like a fresh application. They wait for the regulator's approval and then they got their license. But then for us, right, we are on the deemed status right now. Actually, whole last year, we're kind of dealing with the regulators. There's different inspections and investigations, basically to check whether our systems and controls are robust, whether we are doing a good job in compliance. So all these things are kind of being screened by the regulator. We need to have all these like different monitoring systems in place. They are checking whether we are having these robust systems. Obviously, we need help from some other vendors as well. So they are kind of checking whether these tools are appropriate or efficient. Do we need more of these monitoring tools? And then the other big topic is custody. How are we doing our custody of the assets? Are we doing a good job? How is the safeguarding? So basically, everything the regulators have screened. So we are in these deemed license status right now. So we also got a couple of these licensing conditions. They are public, which the listeners can basically search it on the website as well. So they are got a bunch of different licensing conditions, basically saying that we need to fulfill these conditions from the regulator. So after that, let's say if we to get our official license later on, then it would be like a different assessment again, what they call a phase 2 assessment. So the phase 2 assessment is we need to engage an external assessor. So external assessor will come in and assess the effectiveness and operational side of our systems and controls. So let's say if we mention our controls in our policies, but do we actually implement this, whether it's working effectively? So this is what about the phase 2 assessment that will need to be checked. So you can see from the regulator side, they are really kind of screening everything from start to the beginning, just to ensure that everything's in line. But I think it's a good thing. Probably some will think that it's kind of a barrier, or maybe it's too much on the compliance side. But from my personal perspective, I would say, because again, from the compliance, from the regulator side, right, it's because of like consumer protection. So let's say if something fails, then probably consumer and all these investors, they will lose their money, right? So I think it's still very important to ensure that the company, the platform really implements all these controls to safeguard clients' assets. And I think it's good also for our side from Matrixport, because we already these compliance very strongly. So we kind of support what the regulators are doing, and we think it also kind of let us have a good reputation, good compliance reputation. So investors and clients, they can kind of be more comfortable.
Yeah, for sure, for sure. I totally understand what you're saying. And you've mentioned the requirements with respect to monitoring. So I reckon that you have the side, which is from you being a trading venue, basically, you need to have robust reporting and monitoring of the transactions and to see that everything is in place in terms of the leverage and in terms of the trading practices and so on. But from the point of view of AML, what kind of requirements do you have and how do you mitigate them?
So in terms of AML, I think there are basically a lot of different requirements, like from KYC to KYT to transaction monitoring, market surveillance. So basically all sorts of different series of monitoring that we need to have in place. So again, as required from the regulations, from the laws, we need to take a risk-based approach on this. So risk-based approach meaning that there isn't like a fixed framework for all these, like how we should do the screening, like how to adjust the scoring, etc. But it's really based on the business and probably how our compliance program are. So I think the regulators are kind of giving insights on these as well. Basically, when we engage with them, they will also kind of guide you through these things. So I think it's something really good from the regulator. It's not like a top-down approach, but they really engage with the industry, the stakeholders as well. So I think in terms of AML monitoring, these are the requirements that are in place, and again probably constantly shifting because of all these like different things that are happening. Again, the hackings happening globally or other scams, so these things will need to adjust as well.
Yeah, so it's a great segue because you mentioned the hacks, and obviously we're let's say a month after the Bybit hack, $1.5 billion that were stolen. And you also mentioned that you have some requirements with respect to how you custody the funds of your clients. So what kind of security arrangements do you have at Matrixport to basically prevent the next hack? And kind of a follow-up question, what kind of requirements do you have from the regulator? Because to be perfectly honest, I'm not that familiar with the SFC and its requirements. We know that, for instance, in Europe, we have the DORA regulation, which is more focused on the security side of things and on the operational side of things. So maybe you can elaborate on how it works in Hong Kong and in Matrixport in specific.
Yep. Probably I can start with the requirements first. So, as required by the regulator, it's kind of being clearly written down in our licensing conditions as well. So, in terms of these wallet security or how we do, they require this FIPS 140 level 3. So, it's kind of written very clearly. So, basically, this I would say is already pretty high standards and all these things like air gap HSM. So, comparing with some probably industry standards like MPC or multi-sig regulators here, they prefer HSM. So this is what we implement as well. And in terms of other operational stuff as well, probably from cybersecurity side, there's this technology audit and also an independent cybersecurity assessment that the regulators require. And it's written in the FATB guidelines. So basically, it needs to assess all these things like wallet security, network security, and all these hardware things. So I would say, again, the regulators are pretty concise and focused on all these like different aspects. It's not just like a broad, let's say you need to do cybersecurity checkings. It's like really written down which levels, how you need to do, what are you required to do. And the SFC, the regulators also got a team of experts basically to screening all these things in the company, whether these are being implemented. So I would say all these like different independent assessments, audits, which kind of screen through our systems and controls. I would say this is also what we are doing to abide by the rules and regulations.
Yeah, and you mentioned earlier KYT and transaction screening practices. Can you give me a specific example of maybe, like something that has happened or in theory can happen of what do you have to check? So let's say right now you're receiving a certain amount of funds from a client, right, into your wallets. What type of screening do you have to do? How many hops backwards do you have to go until you say, okay, it's sufficient for me. I understand that these funds are clean and are not illicit.
Yeah. So, like for example, hops, right? I think this is again really a risk-based approach. So there's no clear definition from regulators, like 3 hops, 5 hops, or 10 hops. It really depends on the situation, the circumstances as well. So let's say if funds coming in, we need to scan the wallet address, we need to scan the transaction. So basically everything will be scanned. So I think in that end, so it's kind of a really thorough screening to ensure that the wallet itself does not associate with illicit funds, and then the different hops as well. It's kind of the scoring methodology. I think it needs to be adjusted kind of on these situations as well on a risk-based approach. So basically screening on all these different transactions. This is what we are doing on the KYT side. Yeah. So I would say with these things on hand, the risk is quite low, I would say.
Yeah, that's very interesting. And earlier we talked about customer protection and investor protection. So, and you mentioned the FCA with that respect. So the FCA, for instance, has introduced the APP fraud regulation that basically requires platforms such as yourselves. Yeah, I have to say it's mostly directed towards PSPs, but nowadays exchanges are also becoming more liable for that. That basically, if one of your clients got defrauded, you have to reimburse your client for the loss that they encountered. So how does it work with respect to Hong Kong and specifically at Matrixport? Let's say if one of the users was scammed or maybe fell victim to a pig butchering scam, what type of remedies do you have to give to that specific victim?
So I'll use Hong Kong as an example again, because I think the SFC is doing a great job in laying down all these like consumer protection regulations. So for this VATP in Hong Kong, so basically the SFC says that according to the guidelines for hot wallets, there needs to be 100% compensation. For cold wallets, there needs to be a 50% compensation. So for all these like hacking events, fraud, etc. So this is also what we're doing in Hong Kong as well. But, obviously, it also depends on the firm itself. According to rules, it's like 50% for cold wallet, but we can do 100% as well. So it depends on the firm itself. And for the, probably I should also mention on the ratio. So the regulations here in Hong Kong defines the ratio as 98% needs to be stored in cold wallet, 2% in hot wallet. So this is probably a bit different from like globally, but then cold wallet, I would say it's more safe. So that's why the regulators wants most of the asset to be stored in the cold storage. So this is kind of how it works. But then back to the consumer protection side, I would say hot wallet, probably it's because it's most accessible to being hacked. So 100% of coverage, and then cold wallet is 50%. And insurance is also mandatory for the firms in Hong Kong. So they need to work with the insurance providers here to basically have these insurance in place. And then the insurance amount is also kind of mirror the business size and the transaction volume as well. So obviously, if there's a high volume, high business size, the insurance that we take probably would need to be high as well. So it can cover basically potential hacking or fraud events.
Yeah, very interesting. And can you share, and it's okay if you can't, any data on how much money you spent on reimbursements, or do you allocate a certain amount of your budget for that, just to understand, the magnitude of this phenomenon?
Yeah, I can't disclose the amount, but yeah, we did allocate a certain amount as well. So aside from the insurance, we also put in a certain amount just to kind of buffer on top of the insurance amount. So it's kind of also a good gesture. So aside from the 100% or 50% insurance amount, we also top up a bit. So in case of these hacking events happen, we'll also be able to reimburse the client.
Got it. And more specifically, so, that's the end of the value chain, so to speak, because, once the person got defrauded, it's already too late.
Right.
But if we go back a little bit and we talk about your efforts to prevent those frauds and scams from happening, can you share a little bit about, which tools are you using? Because I can imagine the volume of transactions is huge at Matrixport. So how can you assure that the transaction, especially for the retail clients, are being protected for the risk of fraud and scams?
Yeah. So basically, we screen these things. We providers are like Chainalysis, Solidus Lab. I think these are kind of the big names which are used by the industry as well. So basically, we kind of screen these transactions. We do surveillance as well, just to ensure that real-time monitoring is being implemented. But aside of these vendors or these monitoring tools, we also do our kind of internal controls. So, like for example, let's say if a client he kind of whitelist an address, but then de-whitelist the address again, and then he performs second time a whitelist again and de-whitelist again. I mean, these frequent activities kind of raise some red flags. So actually, every time when the client whitelist, we already scan it. So probably it will be like a non-illicit wallet address. But then these activities, like for example, delist and whitelist again, probably these will raise some red flags on what the client is actually doing. Is that some kind of potential scam? Is the account being hacked or what? So on this end, we also do IP monitoring, right? So combining all these things in-house, we also do our checkings to kind of be more proactive. So it's not a kind of a reaction after hacking, but then before like potential hacking or potential incidents, we also kind of identify potential fraudsters or any account takeover from the customer. So we want to ensure that the whole chain of events is being kind of monitored, just to prevent these activities from actually happening.
And out of all those risks, so obviously you've mentioned, the different security risks like hacks and account takeover and so on. And obviously there are plenty of scams and rug pulls, address poisoning, and obviously pig butchering, which is a huge issue right now. According to our data, in 2024, on Ethereum alone, $5.5 billion were stolen. So which vector of attack or which risk vector do you define as the most troubling right now for you?
Troubling, I would say, is probably events kind of similar to the Bybit incident. Probably all these like social reverse engineering stuff. Because I think usually for this event is kind of the ways that, for example, they mimic the page. Let's say they mimic our official web page, our account opening page, right? So I guess from a client perspective, probably these are quite difficult to spot. Probably these fraudsters, they're not going to defraud the company like us, but they're probably going to defraud the client. So I guess in that sense, probably it's a bit more troublesome to detect from that end. But then on company side, I guess we are doing everything we can to kind of doing fraud prevention, like all these monitoring to kind of just ensure that we detect potential frauds before it happens. Yeah. So I guess it's probably both ways. And for customers or clients, I think investor education is also very important. And in that end, I think the regulators are also doing a good job. So all these like a promotion from the regulators saying that these potential fraud incidents, be aware, etc. I think education is also an important thing.
Yeah, and you've mentioned the Bybit hack, obviously, which is on everyone's lips right now during the talks. And I would like to do a quick self-promotion here because we had 2 episodes with amazing security experts, Manny Khan from BitGo and Charles, the CTO of Ledger. So I really advise yourself and the listeners to catch up with those episodes because one of them breaks down exactly what happened during the Bybit hack, and the episode with Charles explains how we can prevent the next hack. So it's really advisable. That was my 30 seconds of self promotion. And now let me ask you, one of the things that just came back from DAS, from Digital Asset Summit in New York, and I think that the hottest word there was RWA, real world asset, right? And
Yeah.
that's basically probably one of the fastest growing segments right now in the crypto space. What type of an activity do you have with respect to our RWAs? And what are the unique regulatory or compliance considerations that you have there, if any?
So I guess in terms of RWA, I think product categorization is really important because this is also one thing which the regulator emphasized in Hong Kong. So for instance, the HKMA, there's this kind of sandbox thing which they call the Project Ensemble. So they are testing out all these like real world assets, RWA things in Hong Kong. So for example, they are testing out real life use cases in terms of like fixed income, bonds, green finances, supply chain, etc. And there are different kind of different companies and banks as well. They're kind of testing out in this sandbox. So I think product categorization is important in the sense that it prevents this regulatory vacuum. So regulators will be able to kind of see which method or how they are going to regulate this RWA assets. Is it based on like the underlying assets, or is it because of its digital form? There will be like a new way of regulatory. So I think the regulators also are laying down a framework on this, and we continue to see different use cases and different kind of consultations here, especially in Hong Kong as well. So I would say it's continually evolving here as well. And again, on the regulator side, balancing innovation and regulation, both things are doing in parallel. And I guess the stakeholder engagement is also very important, just to see how the industry players are doing, what type of products they want to launch, is it viable in Hong Kong, like how the regulators dealing with this. So I guess it's kind of a balance and kind of a collaboration between everyone.
Yeah, very interesting. And last question before we wrap up. Where do you see the Hong Kong Web3 industry is going? Do you think that Hong Kong eventually will become that big shiny crypto hub? Or obviously you have a very fierce competition with Singapore, but Hong Kong. And by the way, Hong Kong used to be in terms of TradFi, right? For the people that don't know, it used to be a major hub. Then it went to some sort of a decline. And now it seems like it's picking up again, both in the TradFi space and in the crypto space. Where do you think that we will see Hong Kong in 5 years from now if you take, the capital influence and the regulation and so on? Will it become Asia's #1 crypto hub?
Yeah, so I guess so Hong Kong has this really strong financial infrastructure, so what they call international financial center. So I wouldn't say it declined, but probably because of different like global events and stuff like that, probably there's something a bit of a turmoil, but I would say it's still very strong in terms of the stock market as well, in the traditional finance space, banking side, etc. But in terms of Web3, I would say with this strong government support and regulators coming in as well, being agile and being kind of working together with the different industries and different stakeholders as well. It's not like a top-down approach where they publish a guidelines and firms need to kind of follow that. They actively engage with market participants. There are different consultations, different seminars. So basically, I would say the Hong Kong government and the regulators, they're kind of really pushing this Web3 ecosystem. They're kind of using TradFi to embrace Web3. So I would say this bridging is really important. And with the strong support from the government as well, I would say Hong Kong will become a very strong Web3 hub. And also comparing with our different I would say competitors, probably Singapore and Asia particularly. I would say
Dubai as well.
Dubai as well, yeah, the FARA, etc., the regulators. Yeah, I would say probably different regulators have different approach, but speaking from Hong Kong perspective, I would say Hong Kong regulators are doing a really good job in terms of all these things, for example, consumer protection as well. So if I'm speaking from a client perspective instead of compliance, I would say I would be very, 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 very comfortable to onboard in a firm which is regulated by SFC, because I know that if things happen, well, but touch wood, I hope it not, but if things happen, I will have my money back. So I think this is a very important thing as well. And then for firms and new players coming into Hong Kong, there are clear guidelines from the regulator. They will guide you step by step on how you do this, how you do that, etc. So I would say combining everything with all these market participants, regulators, government, everything, everybody working together in collaboration, I would say Hong Kong would become a great Web3 hub in Asia and probably globally as well.
Yeah, for sure. And you mentioned, communication between the regulator and the industry. I think it's one of the most basic things that you need to have. It sounds very simplistic, but in many jurisdictions, and I hear that from compliance managers and lawyers, that you have a lack of communication and everything comes top down.
Exactly.
And if you sense that there is a good communication and that you can have your day in court, so to speak, to explain why this can be harmful for the industry, or maybe this would be a better framework, then definitely it's a win. So, Derek, on this note, thank you so much for participating. I think it was interesting, illuminating. I would love to catch up later and to learn more. And thanks for being here.
Thanks a lot, Michael. Thanks for today's session as well. Great to meet you.
Thank you. Likewise.
Thank you.
Web3 Watchdogs is sponsored by Cyvers, your one-stop shop for Web3 security and threat mitigation. Cyvers harnesses the power of AI to eliminate hacks, scams, fraud, and compliance challenges in real time, and even before they happen. For more information, visit cyvers.ai. That's CYVERS.ai.